There's one thing in particular that isn't even on Bitcoin's chart that I think could tell us a lot about what's going to happen to Bitcoin. It's basically Bitcoin's final straw, as far as I'm concerned. And the reason that I think this is a really big deal is if what I'm about to say ends up happening, and I'll get to this in just a minute, I think we could be looking at Bitcoin not only potentially halving in value, kind of dropping down to like $11,000, $10,000 or so, but it could just get really shit. It could just be something where it takes us weeks, months, well, definitely weeks, but months, maybe even a year or longer to get out of this horrible bearish range. Basically, it could get a lot worse. And I think a lot of this, it doesn't depend on what's going on with Bitcoin's chart. I don't even think it depends on what's going on with the dollar to an extent. It is pretty important, but it's the S&P 500, ladies and gents. This is something that I haven't spoken to you guys about for a little while. Obviously, I talk about the S&P 500 very regularly, but something in particular I haven't spoken to you guys about for a little while is this right here, guys. It's this orange line, which represents the 200 week. We're on the weekly time frame, the 200 week moving average. It's actually this one right here. And the reason that I think this is really important, you guys are maybe even jumping ahead if you've been subscribed to this channel for a while, you're going to know that we talk about this all the time. Is this 200 week moving average has been very, very reliable for the S&P 500. I've just zoomed out on this chart all the way back to the 70s. And if you take a look at this from the kind of late 70s up until the present day, the S&P 500 is generally able to get some really nice rises off this 200 week moving average, with exceptions. Okay, this was 2001, the dot-com bubble. This was 2008, the financial crash with the really, really big one. But then after that, again, we're bouncing off this 200 week moving average really nicely. March coronavirus crash right here was an anomaly, and the market actually recovered back up pretty much instantly when we zoom out this far, and we're here again now. And the reason that I think this is really important before I even start zooming in and talking about the real implications of this is that when we're guys, let's just be real, okay? Let's just level this and get fucking real for a second. If you appreciate that, do me a favor and just smash up the likes. Make sure you're subscribed as well. Bitcoin is a risky asset, okay? Bitcoin is a fucking risky asset. Let's just get this out of the way. And the only way that risky assets are going to be rising is if investors feel comfortable taking on risk, okay? And one of the ways that investors can feel comfortable taking on risks is if the conventional markets, the relatively safe ones, are doing well. And the S&P 500, for those of you who don't know, is a collection of some of the top 500 companies in the United States. So it's a really nice kind of gauge of the strength of companies, at least their stock prices, within the United States, and it applies to the Nasdaq and UK's FTSE 100 and everything. It's broadly similar, but I'm focusing on the SPX because it's one of the biggest ones. And the reason that I think this is important, guys, is if the S&P 500 ends up getting a bounce, if it ends up rising off this 200-week moving average, like has happened so many times, but not every time, then I think Bitcoin could be in a really, really good position to continue to rise up, because then we would we would have a really, really nice setup where on quite a serious kind of support level, the S&P 500 has been able to rise up, and I think that could kind of open up the risk appetite that people have in this space for taking on some of these more speculative plays, and it would probably also mean that the dollar ends up dropping as well. So I think that's all really exciting. One of the other things that I want to talk about just before we get into this, actually I only saw this from 𝗙𝗙𝗏𝗏, is that by the way, this is like my favorite. This guy's my favorite analyst on YouTube. Him and 𝗏𝗏𝗏𝗏, I talk about them all the time. These are my two favorites. I've learned so much from them. I owe my life to them. They are amazing people. They're both on YouTube. Go check them out. They're better than me. So if you like my stuff, you're gonna love their stuff. 𝗙𝗙𝗏𝗏𝗏 was talking about how the Fed could be looking to potentially raise interest rates a little bit slower, so that is to say less aggressively, or stop raising them altogether, at least for a little bit, because interest rates are getting very high. Okay, mortgages in the US are reaching like 7%, which is absolutely ridiculous. They were closer to like 2%. I don't need to tell you this, you know this if you're in the United States, and it's not different across the rest of the world. I mean, things are getting absolutely fucking crazy. So things like raising interest rates, I don't know how long that can go on for. And the idea is, if you kind of zoom in, the S&P 500 has seen, a nice kind of bounce right here on this daily chart yesterday because of that news that things might slow down a little bit. And the reason that's good is with interest rates that stop increasing or actually go down or increase slowly, that is potentially going to be a sign that things might be getting better in the speculative markets, because it's complicated, but the long and short of it is basically that when interest rates are low, it's easier to borrow money, and that borrowed money can be put into financial markets like the S&P 500. It's very common. If your interest rate is 2% and S&P 500 on average goes up by 8%, you can pocket that 6% margin. That's why interest rates are important, guys. We're 5 minutes into the video. If this is the kind of thing that you want me to talk about, let me know in the comments down below. This is not technical analysis. This is economics. It's not what my channel is made for, but if it's something that you find useful and if it's something that you want to hear from me, because obviously I'm talking about this in a really easy to understand way, right? I mean, you can get this even if your profession has nothing to do with finance. If you think it's good for me to keep talking about this, just let me know. Otherwise, I'll just stick to the technicals because, to be honest, that's what I want to talk about more than this stuff anyway. Let's get to that on that note. So if we take a look at what's been going on with the S&P 500 right here, we have been bouncing off this 200-week moving average really, really well. But if we zoom in a little bit more actually to the present day, it's not all sunshine and roses. And the reason for that, if we do take a very close look, is, we've kind of been here for a little bit now, okay? So we fell down to this level back here on the 26th of September, the week starting 26th of September. And we're still, with the exception of this candle, which is about to end the candle's ended actually. With the exception of this candle, although it is still kind of in the same rough range, we have been stuck down here now for basically, I know it says 21, but for 28 days, okay? So if we include this bar as well, we've been stuck down for quite a while. We can actually check this out just kind of by looking at the daily. It's exactly 28 days right here that we've been kind of stuck in this range, which is a long time to be spending down at this, support level, okay? Generally when we have a support level and then we kind of fall down to it and we just kind of fuck around the support level, the longer we stay here, the more likely it does tend to be that we're going to end up breaking down, okay? So that's the same thing that Bitcoin has done many, many times. I'm sure you're very familiar with this. We hang around a support area, we trade sideways for a while. Bear in mind, we're on the weekly time frame, so this is a very long time. This is, again, like 3-4 weeks. Bitcoin's just kind of stuck here, and then the trapdoor opens up and we fall down, okay? So very, very common, when we kind of spend time hanging around a support area, it's not a good thing. Obviously the S&P 500 is looking good now, and you guys know my take on this. I've been very vocally bullish on all of these markets for a little bit because everybody is too bearish as far as I'm concerned. I still like to look at the fear and greed index. Guys, look, every time I refresh this, it's like the numbers don't change. We're fluctuating between 20 and 25. We've been stuck here for so damn long. Look at this. We literally haven't fallen below 20 for the last month, and we haven't risen above like 26 basically for the last month as well. Such a tight range for the sentiment index to just kind of be stuck between, and to be stuck there for a long time and kind of at a key support level. You know what I mean? Like, I've been saying this for a while, especially for Bitcoin, but also for the S&P 500. I do think that if there's any time that at least a relief rally where Bitcoin can get up to say 30k, 40k or something, maybe not 40, but certainly 30, 25, whatever. If there's any time that Bitcoin can pull that off, I think it is going to be around now. Doesn't mean it's going to happen, but I'm certainly look, I'm just trying to stay level-headed as much as I can, while I'm noticing that everybody else is really getting swept along with that fear and uncertainty and doubt that's quite fucking evident, to be honest with you guys, in this market. It's really nothing that I think is surprising at all. But anyway, we move back to the S&P 500, and guys, take a look at how we got bounces off the S&P 500 before, okay? So what we're doing right now is very much out of character. On this occasion, we didn't quite hit it, but I think that's good enough. Very, very clear. Look, we fall down, we just wick down to this area, and bam, we're up already very, very quickly. Very, very common. This drop, by the way, when it came in, I was very vocal about how I don't think it's going to stay. Everyone was calling for recession and crash and everything like that. If you were watching my channel back here in 2018-19, you're going to remember that I was actually very bullish on the S&P 500, and I was saying the same thing that I'm saying now. I was saying that too many people are too bearish, and I just don't like to be in agreement with the masses, okay? You guys know the deal. 90% of the people in this market, in any market, are going to be losing their money, and by extension of that, if you find yourself in agreement with everybody, then, I don't know, to me, that's just not where I like to be. That's just me. You do you if you're different, but that's just what I'm looking at right now. If you're wondering what I'm doing, I'm trying something out today. I've actually never listened to music while recording a video. I'm really enjoying this. But anyway, let me zoom. And I can't put this on the video because I'd get striked. So fuck you, YouTube. I found a workaround. If we take a look at some of the other instances where we lost our support level, here's a good example right here. This was, the kind of crash. This is actually very much what we could be doing right now, where we kind of, in this case, we didn't quite consolidate at the line, but we consolidated near the line for a long time. We stayed here for a long time. Then we dipped below, kind of faked out. And then we managed to recover a little bit higher, only to, actually even backtest this line and find that kiss of death before dropping down. Okay, so this could very much be something that we're looking at right now. This kind of rally is exactly what I'm calling for. And look at how beautifully it plays out. We fall down to the 200-week, bounce, get rejected at the 50-week, and drop down, backtest the 200-week. Over here we backtest the 50. Over here we kind of falter around the 50 and then actually kind of generally find support. It's just very interesting how this TA always works. But this is a good example of something that's happening similar to right now. We're stuck in this range the same way we were stuck in this range back here in 2008. So I think that's a really big thing to kind of be paying attention to. On this occasion right here, we just fell right through it. Nothing happened at all. But again, we go back and take a look at this. A nice bounce right here. We've spent a real matter of weeks down here. That's actually a little bit longer than what we've done currently. So, we could still go on for quite a while around this support area. This one definitely looked like it would break, but it didn't. And the S&P 500 kept on rallying higher. On this occasion, we got two quick, sharp bounces. Really exactly standard procedure. Here, bit of a fake out. Here, fairly quick bounce. And I don't want to look at anything before this because the chart gets very messy. Let's see, yeah, and then again, historically, you can see some quite nice bounces. Here we take a little bit of time. Here was a quick bounce. Look, it's fairly consistent. It's fairly consistent that if we are going to get a bounce, we're going to get it quickly. And what's also fairly easy to say is that if we mess about and we don't really get a real bounce within a good amount of time, within a relatively short space of time on this S&P 500 chart, if we don't get a bounce, then our chances of breaking down are quite high. And the thing is last time we faked out and we very quickly recovered back up. This is very much an exception. Generally, that's not going to happen. And so I don't want to bet on that happening again. Something a little bit like this. In fact, I think it could be a lot more like this, where not only did the S&P 500 drop down, and bear in mind we're on the weekly time frame. Okay, this was a really, really long time. In fact, let's just measure this from the point that we lost the orange line to the point that we got back above it. It was 854 days. That's like 3 years or 2.5 years. It's a very, very long time. And it's about 2.3 years, I think. It took, just to reach the low, it took the S&P 500 nearly, what is this, like 7-8 months, to reach its low. It's absolutely bloody abysmal. There's no upside. There's no nice thing to talk about here. Same for the .com bubble. It took a really long time just to bottom out. It took 600 days to get back above this line here. It took over 1,000 days. Okay, so again, this is 3 years flat, basically. Very, very long time. For the S&P 500 to recover if it loses that line. And again, what does that mean for Bitcoin? Well, Bitcoin was born basically like somewhere, what am I talking about? My bad. Bitcoin is born like somewhere around over here. Okay, so everything after this red line is where Bitcoin has existed. Bitcoin has never experienced the S&P 500 losing such a crucial area of support. And certainly the S&P 500 being in a real bear market. Bitcoin just hasn't experienced that. Okay, and I think that, like I said, Bitcoin is going to be quite dependent on what happens with the S&P 500 because, we have actually been in a situation here where, investors are going to want a little bit more confidence before they start taking on really risky bets. Bitcoin is not something where us basement dwellers or just normal people, for lack of a better word, can push Bitcoin with any real meaningful volume anymore. We can't. We need bigger players to be in. Those times are gone. It sucks to be the case. It sucks for me to say it, but we're not just gonna fucking ignore reality because it upsets us. That's not what we do on this YouTube channel. So, with that in mind, I am a little bit hesitant about where this might go for Bitcoin right here, in terms of, potentially just, for the S&P 500 in terms of potentially dropping down. And, if that happened, it was quite substantial drops for the S&P 500. Kind of, when we lost these areas, there was a 48% drop right here. It was a, 40 odd 35% drop right here. even if we drop down to like, 30% lower, it would still, I mean, what would that translate to for Bitcoin? It could easily put Bitcoin at like $6,000 even. I mean, it would be very, very bad. And it's certainly, I think a big crash would come fairly soon as well, so these are things that I'm just keeping an eye on, things that I'm staying very consciously aware of at this point in time in this market. And surprisingly, this is a very common thing to be talking about with the S&P 500, the 200-week moving average, but I just haven't really heard anyone actually even talking about it. So that's why I wanted to bring this up to your radar, just so that you can keep an eye on this as well. I think this is a really, really important metric to be keeping an eye on at this point in the market. And you know what? The good news though is that if we do end up getting a bounce, and we kind of already are getting one, I don't know how this is going to look. It could be that it kind of takes us a little bit higher and then we fall through. That's very, very possible. It's happened before. It could happen again. But if we do end up kind of getting a bounce that sticks in some way, then yeah, I think that's really going to open up the skies for Bitcoin. I think that's going to be a very, very bullish thing. It's not what I'm expecting for the S&P 500. Definitely not. I don't think the S&P 500 will be able to pull that off. And my reason for that is, we've got some we've got some resistance areas that are fairly close. They're not actually very far away. At this point right here, this resistance area is only 5%. The next one is a further 5% away, and the next one is about 3% away. So, we're pretty close to a bunch of resistance areas, and obviously we're still in quite a bearish structure right here for this index as well. So, is it likely that we're going to be breaking these resistance levels? I don't think so. Is it likely that we're going to hit them? Fairly likely. And that's all we need as traders. That's all we need. You guys know the deal right here. I am a trader. I'm a trader that trades short-term moves. And Bybit is where I like to do all of this. You're getting $4,000 sign-up bonus. BitGet, by the way, also offering you guys a sign-up bonus. This is you deposit $4,000, you get $400 if you trade a little bit, completely free of charge. You can trade with that, do whatever you like. Bybit is offering you guys 4,000, so go ahead and check them both out. The cool thing about BitGet is that you can be anywhere in the world. I mean anywhere in the world and use BitGet fully. You don't need to use a VPN, and you don't even need to do any KYC to access BitGet as well. To trade with BitGet, to withdraw from BitGet, you don't even need to do to do KYC or use a VPN. So very, very flexible. Bybit is going to be my favorite, though. They're both linked in the description, so go ahead and check them out. If that's something that you want to, trade, if this is something that you want to trade, and if you want to trade in the same places that I'm trading, because I am using both of these exchanges now, and they are pretty much the only two exchanges that I'm using as well. So go ahead and check them out if you like the idea of all that free cash. Like I said right here, we don't need crazy things to happen. I mean, even if the S&P 500 just kind of gets up here, that's probably going to spell some really nice, fun plays for Bitcoin. And obviously that would be something that I would anticipate, that I'd, potentially be finding some trading opportunities in as well. So lots going on this chart right now. I've been informing VIPs of some really, really important things that I've been looking at in this market. I'm not going to say too much about it because I don't want to, that's a VIP. But if you want to jump inside, this is critical. I've done something that for me is fairly big. The details are inside, and the deal with VIP is everything that I do in the future is in there as well. And I just want to make a quick note about, obviously the key thing with VIP beyond, there is, you can watch me trade in real time. That for a lot of people, that's a really cool aspect of VIP. I'm literally telling you what I'm doing, where I'm doing it, why I'm doing it, down to the dollar, where I'm entering, taking profits, stop losses, everything. But more importantly, the explanations behind that. But you're getting a whole other suite of benefits beyond that as well. There's the VIP library, which is every single historic VIP video that I make, which is way more advanced stuff than this that you're seeing on this public on these public videos on YouTube, and it's all specifically about trading. So everything you see on this channel is all about analysis. Everything VIPs see is all about trading, and it's specifically there, and obviously there's more analysis from me as well. There is a lot that goes on in there, and one of the things that I did highlight yesterday, for those of you who don't already know, is that when the market is very quiet, very dead like this, we don't charge you. So if you're already in, you don't need to worry about, am I joining at a bad time or whatever. You're not gonna get charged. We're not gonna charge you until we've delivered a really, really good service to you. This is how we've been running VIP for, 4 years. 4 years puts us in 2018. Yeah, 4 or even 5 years. It's been running in some form or another for like 5 years now. very, very long time. And I think that's super fair. We're not getting complaints about it. So to me, that's that tells me that our VIPs are very, very, very happy with it. And I'm stumbling like Joe Biden right now. What's going on? If you want to get inside, and if you want to be able to speak to me on the phone at basically any time, I'm very, very flexible. Yearly members can do that as well. So when you go ahead and check this out with the first link in the description down below, and then click on my name at the bottom of any post within 4Flies Gold, which is my free Telegram channel, and then click on send message, only 3 clicks. When you do that, I can give you all the information about it. And yeah, our yearly members are going to be getting, basically, unlimited, phone calls with me. Nobody's ever abused it. That's why I say it's unlimited. And yeah, we can talk about pretty much anything you like. So if that sounds like something that would be useful to you, go ahead and check this out. And again, yeah, just keeping in mind that you don't need to worry if it's a good or a bad time in the market, because there's always things going on. There's always very, very important ideas that we're discussing inside of VIP, and you're not getting charged during periods of low volatility like this anyway. So you already know this if you're in VIP, but that note was for those of you who haven't joined already. All right, guys, I really hope you have enjoyed this video. You know what to do. If you have, hit up those likes, subscribe, tick the bell, go check out Bybit if you want to trade on the main exchange that I'm using, and BitGet, again, no KYC, no VPN needed for full access to this exchange. Well, not for full access, but for very, very good access. Unless you're withdrawing like more than 20 Bitcoins a day or something crazy like that, you're not going to need to worry about stuff like KYC. So go ahead and check them out. Again, a derivatives exchange as well. Very, very cool. Well worth checking out. It's pretty easy to get their bonus right here. You just have to deposit. I say just, it's $4,000, but for many of you, that's not going to be a crazy amount of money. Deposit $4,000 onto BitGet, and then make some trades that it'll tell you the conditions, and you'll get $400 for free. So, well worth checking all of that out. With that, though, really hope you've enjoyed this one. You know what to do if you have, and I'm out.